if you're looking to invest in oil tankers, you should consider some of these factors that I'm going to bring up in this video. We're going to talk about Nordic American Tankers, a company that carries crude oil from place to place, as well as Frontline and EURN. So welcome back to another video. My name's Adam. I am still an investor in Nordic American Tankers. I started out this YouTube channel talking about tankers, but then sort of talked about not only oil tanker investments, but my investments in other assets such as Facebook that has done really well, as well as a lot of electric vehicle companies. I played Tesla really well, over 100% investment in that. So if you enjoy this video, be sure to give it a thumbs up, subscribe to my channel for more related updates. So in the Discord, I was just notified that a lot of people are selling their tanker stocks or have been selling. And I mean, I can't blame them, right? Nordic American Tanker is still one of my worst investments to date. Now they're paying a paltry dividend of 1 cent per share, which is just ridiculous, down from 2 cents a share. And for my like 300 something shares, it's around like $3 or something. So just absolutely ridiculous. And I mean, over the past year, it's down 7% to date. It dropped below $3. I didn't even think it would drop below $3, but not only did it drop below $3, it's hovering near the $2 range before it sort of skyrocketed a little bit, 12% today. Over the past 5 days, it's up 20%. Over the past month, it's up 10%. How does it compare to other oil tankers? Well, you look at Frontline, it's actually up close to 50% over the past year. So really good investment if you invest in Frontline. This is the company that I should have invested my money in, but you know, it is what it is. You're looking at EURN. Over the past year, it's up by 15%. Over the past 1 year, year to date, it's up like 15%. Past year, it's up by 10%. So still not doing as bad as Nordic American Tanker. And EURN is like sort of the gold standard when it comes to oil tankers. It's sort of like one of the biggest companies when it comes to like being known in the oil tanker space. So a lot of people, including me, are asking like, why are tanker rates so depressed? When you look at the container freight shipping, it costs like 4 times the amount to ship something from China to America than it did last year. And it just like goes on and on. The price of just raw materials, you're looking at copper, you're looking at nickel needed for EV batteries, that has skyrocketed. And it's like, so, you know, how come shipping rates for crude oil haven't done so well? Well, one, there was a depressed demand initially for crude oil, and especially the transportation of crude oil, even as we were coming out of the pandemic. But more and more people wanted to spend on things like clothes and food items, and so delivery services, container delivery services, actually were not doing too bad. So, I mean, you're looking at the year-to-date chart for Nordic American Tanker, down 6%, but 1 year chart even worse, down 20%. In the past 5 years, it's down 70%. Okay, this used to be a $10 stock. Now, can it come to that? I'm not so sure. My average cost basis was around, I think, $5.70 per share, and I'm still holding my shares. And I mean, NAT prides themselves on giving out a huge dividend when income is good. And I mean, they still like to pay a dividend, so that's why they're paying 1 cent per share. But at least it's nice to receive something just by holding on to Nordic American Tankers. And so, oh wow, that's really bright. If you're looking at the news, I mean, right now this is a $500 million company or thereabouts, 495 million. I don't even think this news really affects the price of NAT anymore. That all board members are buying shares, which shows confidence in NAT. Since, you know, if they're buying shares at $2.50 or whatever, and, you know, they think it's a good price, and they especially should know what's going on with the crude oil tanker market, because they're on the board, right? So basically, yeah, like I said, they announced their second quarter results August 30th here, which we'll briefly go over. They announced a 1 cent dividend per share. And you can read through this article. It's actually very useful. I believe I went over this in one of my previous YouTube videos, so you can feel free to check out those out. And they themselves say that these are challenging time for any business, especially tankers. The actions we take today will position NAT for rapid growth once life settles down again. A good sailor always keeps his eye on the horizon as well as on his boat, and we are looking at that horizon and preparing ourselves for what the market will be like in the coming year or two. So they're saying demand for oil is going up. OPEC is raising its output. OPEC is basically a monopoly in the Middle East that controls, in a major way, the prices of oil, okay? Current high oil, gas, and electricity prices are a sign of an energy market in need for more. And we're going to talk about that later because that's very, very important. We're going to look here. There's a huge energy crisis, especially going on in Europe. And when you take that, combined with the fact that other commodities are higher, this generally means that the tanker market will follow suit. Usually crude oil leads the way, but it's been lagging because of the pandemic. But anyways, we're going to come back to that later. Our asset values are continuing to increase on the back of increased prices for steel, copper, and other raw materials. So that's what I was talking about before. So basically the fleet value is going up. They'll get more money by scrapping the ships now just because these raw materials of steel, copper, and etc. are so high. So they're also looking to sell some of their vessels and buy new vessels. So hopefully they get a good deal for both. We have recently announced that we are planning to sell a few of our vessels in combination with purchase of a similar number of more recent vintage ships. So they're probably not going to buy them new. They're going to buy them used, but still they're trying to renew the age of their fleet. We had more than 30 Suezmax tankers a few years ago when we slimmed our fleet to 25 ships. Now we believe it is the right time to expand for the future. The pandemic has lasted longer than we anticipated in early 2020. And that's reflected in, the stock price. It has just taken an absolute beating, down like 70% over the past 5 years. One scenario is that, of course, oil goes out of business. And a lot of people have been saying that, like, oh, NAT is going to go under in the next, EURN or something like that. But the reality is that we still need tankers. We still need ships to transport oil from place to place for a long time to come before sort of the green revolution, in quotation marks, fully basically just makes the need for oil and gas like archaic. Okay, that's going to take a while. The changing of crews on our ships takes place in normal intervals. We have managed these processes as well as possible, always with a view to providing safety for our crews. Actually, I don't think I went over this. This report, their Q2 results. So now's a good time as any to go over. The average TCE, so what they get per day per ship, came in at $7,800. That came down from $9,400 in Q1. Not a good result that you like to see. As an illustration of the potential, the same quarter last year gave a TCE of $48,000 per day per vessel. So this isn't even enough to break even for the operational cost, $7,800. So that's the reason why their stock price is so depressed. But I think we're going to see this nice upswing in the stock price, and I might even potentially sell sort of during this bull run, because I do see a potential bull run happening in NAT and the other oil tanker stocks. The second quarter of 2021 produced a net loss of $28.7 million, earnings per share of negative 18 cents. Previous quarter they lost 16 cents. So they're still losing money ridiculously, like a ridiculous amount, 18 cents per share. Like that's really not nice. The second quarter last year gave a net profit of 33 cents per share. So they 1 cent dividend, like ridiculous. Vetting, this doesn't really have anything to say. So they're losing quite a bit, 28.7 million. I can imagine that they're taking on debt. Our long-term debt includes two current portions that stood at 345.7 million net of transaction costs as of June 30th. That's a lot of debt. Just like FYI, like $345 million, and their market cap is for like 500 million. So definitely not good right here. A lot of debt, and that's definitely depressing their market value. And again, they issued 5 million shares with gross proceeds of 17.5 million under the 60 million at the market established, whatever. So basically, they diluted shareholder value by 5.1 million shares, and that's not something I like to see. But again, I'm not surprised. Like in order to keep paying out a dividend, in order to keep staying afloat, you're losing $23 million a quarter. So obviously you need to issue shares. It's like they've been doing this for so long now that it's like, well, are they ever going to buy back their shares? I am not so sure. But again, this is concerning. Diluting shareholder value is one of the other reasons why the stock just keeps going down and down and down. We'll just have to see what we'll just have to see. And they also put this in bold: from time to time in the shipping industry, Questionable transactions take place, which are not in harmony with sound corporate governance principles, both as to transparency and related party aspects. We have zero tolerance for corruption. I think it's funny that they say that because they always announce when they buy shares of NAT, when the board of directors buy shares, they never, ever announce when they sell shares of NAT. So to me, that's just like, like, why are you saying that? If you're talking about good corporate governance, you need to announce every single transaction that takes place, okay? Or at least have it easily accessible on your website. They even stopped providing the spot rates here. They used to do in the news, they used to provide spot rates here for their ships, but they're not doing that anymore. So again, they talk about selling and buying some of their ships even more. They want to renew and expand their fleet. I mean, they're so heavily under debt. This is normal for a shipping company, and especially oil tankers right now, but it's still like, that's tough. And so, for example, one of their board members, Doug Pennick of Dallas, bought 50,000 shares at $2.56 per share, increasing his share count to 175,000 NAT shares. And he was elected to the board on July 19th this year. Okay, so let's talk about the bull factors here. So despite all this sort of negative news, and I mean, hopefully the turnaround in the spot rates, we see that crude is going up. You look at the 6-month trend, I mean, it's nearing its even like 1-year highs. It sort of reached $75 before going back down. Now it's going back up to, again, $75. And the increase in crude oil prices is a good thing for oil tankers because there's more demand for oil generally when oil goes up. And so the need for shipping of that oil tends to increase as well. So in general, there's a pretty big correlation between crude oil prices and oil tanker spot rates. Another factor is these are the US EURN statistics. So this was like the peak of the pandemic, I guess you could say, in winter. And then we had, well, at least in the States, there was quite a big hump right here as well, a new wave, and it's sort of settling down. So hopefully there's, an argument to be made that, at least in the States, which is one of the major players when it comes to energy transactions and energy needs, the pandemic and EURN cases are slowly slowing down, and that's not going to be too much of a concern. I mean, you're looking at worldwide, there's definitely an uptick in EURN cases, but hopefully as more of like the developing countries get the EURN shots, that'll sort of eliminate this wave and we can just continue on life as normal. On top of that, you just look at like what's going on in the oil market right here, and this article sums it up quite well. So there's panic buying of gasoline in the UK. Natural gas prices in Europe and Asia are skyrocketing. Just look at the natural gas that basically heats houses. Like, it's ridiculous. The government's sort of trying to step in to curb the increase in prices of natural gas, but it's going nuts. So protests are breaking out across Europe due to spiking electricity bills. India and China are short of coal for utilities, and coal is also a much dirtier fuel than oil. Power is being rationed for factories in multiple Chinese provinces, and winter is coming. Winter is also generally a positive sign for oil tanker and spot rates just because of the increased energy needs to heat houses. So first came the EURN-induced global supply chain crisis for container shipping. Now comes a power crunch across Asia and Europe. Energy commodity stockpiles, just like US retail inventories, did not build back up fast enough to contend with post-lockdown demand. So this is all that I've been waiting for, and all of that I've been talking about on my channel is why I'm still holding NAT shares, is because that I was like, well, just like the demand in people wanting to spend on clothes and retailers and whatever, they'll need fuel like oil. They'll also be spending on oil, whether it's like traveling from place to place internationally via airplane or whatever. Just generally, there's going to be more energy expenditure. That was basically the simple bull thesis. But now, it didn't sort of play out like that. There was not, even though there was demand for like services and retailers, there was not that much demand for oil. Okay, not many people were traveling it, right? But now it's sort of starting to show its effects, especially coming into the winter months. Like October, November, December. And so, how could the power crunch affect ocean shipping? For U.S. importers of Asian containerized goods, it's negative. It's another crimp in the supply chain. For commodity shipping, LNG and possibly oil tankers, it's a recipe for higher rates. So you look down and you go at oil tanker shipping, Product and crude tanker rates remained below break-even, but some analysts and brokers believe power shortage in Asia and Europe could help jumpstart these beleaguered shipping markets as well. Oil stockpiles are low. That OECD refined product inventories are now lower than pre-COVID levels, are well below 5-year averages. At a certain point, inventories approach a level where there's no longer much slack in the system, and there'll need to be more shipping of oil to those countries. So in the past commodity cycles, crude oil led the charge, and this time it seems like all the other commodities rose and crude is bringing up the rear. But all the same fundamental factors and drivers are there for crude as with other commodities, so that's awesome. In light of extremely high natural gas prices, that Asia and Europe could use up to 900,000 barrels per day more oil for power generation as a substitute for natural gas. So that's also good for the crude oil market, and that's huge. This would depend on a cold winter and would also likely be focused on east of the Suez, where oil-based fuels have greater potential to form part of the power generation market. So, I mean, it's a nice setup for tankers. You've got improving oil consumption, shrinking inventories, OPEC promising to boost output, and now throw in an energy crisis into the mix as we go into the winter. So here we go, right? Like, again, that's why I'm still on my oil tanker shares, even though, I mean, they haven't done me that well. Like, I'm still down, I think, like 50% or so. But I do think that, you know, like, these things take time to play out, right? Like, it's not always, your bull thesis is never going to go your way. And I totally understand for those people who have sold their position in oil tankers, but I'm still bullish. So, yeah, I think that's it. That's all I have for you today. Let me know down below in the comments. Please join the Discord group. It's totally free, also down in the comments. And let me know what you think of the oil tanker market. If you still own shares of NAT, and if you've been here since day one when I started talking about NAT, props to you. I totally appreciate you. And again, love you all. Take care. Until the next video, try to keep posting more. Take care.